everybody. Jumping in, I'm associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is relatively the same here as last time I did a meeting, maybe some options differences, but basically the same. Actually, I gotta fix. I'm not in the inner tire anymore. I'm not in that. I'm not in that. What was the other one I got out of? Yeah, that's all. That's all. Oh, I'm not in Intel. All right. Let's take a look. Oh, I thought I took those out. All right, let's take a look at the market. Yeah, I mean, market's green, up 0.25%. Qs are up 0.16%. The IWM's up 0.6%, so some relative strength from the IWM. It's despite interest rates being higher today and the dollar also being up. So it was a very slow day, but it felt like a really important day, almost crucially important day technically on where we close. And all the price action came in the last 10 minutes of the day when the market on close orders really hit. Otherwise, this was a tremendously boring day. Initially, we gapped up. I thought we gapped up even higher than that. Were we higher pre-market? Yeah, we were. So we were at about 612 when I started doing the morning meeting, and 610 is this really important daily level. So a close above 610 basically is confirming a breakout on the daily chart. So, know your key levels. We've been talking about this pretty much constantly. Above 610, SPY's going to all-time highs, full-on breakout mode, full-on higher mode, look fantastic. The Qs have already done that with their close above the 530 area. They're giving continuation. If anything, the concern on the Qs, if we continued higher from a gap up this morning, would have been that they would have approached extreme extension today in the 542 to 543 area on a day 4 if they got up there. So day 4 in the Qs, almost at extreme extension, but SPY is really important on whether or not it closes above or below 610. And then the IWM, still not participating, only turns full bullish above 230. But we got to close above 610 today. So SPY's technically full-on bullish. Qs technically full-on bullish. Just watch the extension. IWM neutral bullish. This market is bullish. This market is technically bullish. That just happens to be where we are. Yet the intraday price action, as I was just saying, was tremendously boring. When I started doing the morning meeting, we were at 712. By the time we opened below 711. And I remember noting this first test. I struggle with the 100 numbers. The small numbers I get just fine. But I'm saying 710, it's 6. Pre-market we were at 612. Open just below 611. We tested the really important 610 after 20 minutes. Made a lower high. I remember noting the importance of this lower high. And then we broke through 610. So I'm like, okay, maybe a failed breakout. Maybe. Let's see where we close. Qs. I remember noting this inside 5. Maybe we get an inside 5 and down, but then you run into support at these moving averages. You run into support at the gap fill. But if we can get below 538, the small time frame will start looking bearish, which maybe means that the big time frame needs to satisfy the upside extension. But this market is very, very insulated. Have a look at Pat's note this morning. The systematic flows monitor. I think this one comes from Bank of America. What I want to point out is SPX gamma. It's large in size, but could fall off as options expire. So most of this week, that's last week, SPX gamma was relatively modest at 4 to 6 billion. However, on Thursday, SPX gamma jumped higher to 11 billion. I remember it seems like relatively recent where breaching 10 billion was like all-time highs basically on that gamma level. Now it seems like it happens all the time. But when the SPX gamma exceeds 10 billion from what I've seen anecdotally, this market becomes almost impossible to move. It's such a huge number, $11 billion in the context of the amount of flow that you see in a typical day. SPX moves 1% up, it's met with $11 billion of selling. SPX moves 1% down, it's met with $11 billion of buying. Very, very, very hard to get a market to move at that number from everything that we've seen. So even when I saw the Qs breaking below 538, and I know the extension on the daily, I know the 5-minute was starting to look a little bit worse. Even when I saw the SPYs get below 610, I'll be honest, I wasn't really expecting any downside follow through, just because the more we pull down, the more buying we run into. It's very hard to get this market to move. And you can look at the tightness, and look at the tightness of the SPYs. It couldn't do anything. It basically sat, and the Qs, SPYs and Qs, sat around unchanged pretty much all day. So, you know, the bottom line, and this is nothing new, is that we need some of this gamma to roll off in order to enable this market to be able to move a little bit. And we'll see what things happen after we get through options expiration, which is on Friday. We have our VIX expiration tomorrow morning. I did mention in the chat that at some points in the past we've seen weakness into options expiration is like almost like a little bit of a front running of it. But Bill was smart to point out that given that we have NVIDIA earnings next week, it's really hard to kind of expect that, or to expect a big move of any sort until we get through this week, and until we get through the NVIDIA earnings report, unless some sort of black swan that no one expects that actually happens. So yeah, this market just remains incredibly resilient, and it should stay that way. But the interesting part about it is what happened underneath the surface today. I'm not surprised that the Qs closed like flat positive. I'm not surprised that the SPYs closed flat positive. It just blows my mind that the market's able to do that when almost every single Mag 7 stock finished negative today. Apple finished very small negative, and that was probably the best one. Meta finally had its first real red day, and it was like a negative engulfing candle. Meta closed down like 2.5%, probably almost 3%, and that's these names gave these huge rips into the close as well. And Meta ripped $8 basically into the close. Really, really impressive. But even with that, Meta absolutely smoked, kind of a bearish engulfing. I would have preferred a little bit of a weaker close on this with a little bit more of a downside tail to kind of confirm this as being like a real engulfing candle with a close below the 80 MA on the daily that would indicate that this needs to price correct further down. But all that move came into the close. So Meta, again, a terrible close. AVGO, I noted in the morning meeting that this could be a short through like the 228 area. It, you know, wasn't a great short. It was kind of a momentum short. It would have been difficult to trade. I didn't take it. But AVGO closing down 2% on the day. Amazon traded terribly today. We noted that one in the morning meeting as just a bearish looking pattern here. Broke through further support levels. And there's another one. Insane rip into the close on these MOCs. But even with that, Amazon closed down a full percentage point on the day. Google also closing down. Google closing down 0.85% on the day. Daily chart looks terrible. Microsoft. Microsoft green? All right, there's a green one. And that'll happen in the last 10 minutes. So, and still looks pretty terrible on the daily chart. What about Tesla? Tesla also red, but tight inside day for Tesla. Blows my mind that we have indexes that are, because of the market cap weightings, like, I mean, I don't remember what the latest update on it is, but how many times do we talk about for every dollar that goes into the QQQ, 48 cents goes into, and I made that number up, but I know it was some crazy number, 48 cents goes into the, you know, top 7 stocks in the NASDAQ. And for the SPYs, it's not quite as bad, but it's still an insane number. Like every dollar in the S&P is, you know, 28 cents or something like that into the top 7 stocks. Yet I'm able to type up all these Mag 7 stocks being negative, I guess, except for Microsoft because of its tight rally into the close. And still, oh, NVIDIA was the one. Oh, NVIDIA barely green either. Did NVIDIA close green? What was the close? Whatever. If NVIDIA even closed green, it barely closed green, and that also came in from the last 10 minutes. So you pretty much have like none of these Mag 7 stocks green today, yet the Qs were able to close green. It's just incredible. QQQE up 1.2%. QQQ up 0.17%. This is the complete opposite of what we have seen for the last couple years. The question is, can it be sustained? I actually, and I mentioned it in the morning meeting today. To me, it's just a whole additional piece of information that I would view as a big warning on this stock market. Yet, you can't deny that the spies are breaking out, that they're bullish. You can't deny that the Qs have broken out, that they're bullish. You can't deny that the IWM again is neutral bullish. These technicals are just super bullish. But I would also point out, every single time over the course of these last 5 years that we've started to see leadership come from the short basket of stocks, the meme basket of stocks, the growth basket of stocks, that's been pretty much the end of a bull run. We should also note, as I say that though, the move that we saw at the end of 2020, early 2021, just kept going and going and going and going. So the question is, how long can this be sustained, and which way does it eventually break? And I don't have an answer to that question. Does the technical weakness on some of these charts I'm looking at, like Microsoft, Amazon, Google, none of them look good to me. Tesla does not look good to me. AVGO looks not that great to me. Does the weakness in some of these charts on Mag 7 eventually cause everything to kind of fail, and these high flyers that are getting a little bit silly? I just type up HIMS, but you got Hood. I know that these names actually pulled back a little bit. Dare I type up Palantir? Actually pull down everything else? Or does the opposite happen? Where this market that never can seem to go down, eventually, the huge buyback in Apple and Microsoft and all these stocks eventually just outweighs the selling and they catch their bid again. It's really hard to say. I don't know. I would view it as an additional warning signal, like I just said, but at the same time, it literally seems like absolutely nothing can cause the market to break. And how can you get the market to break when you've got $11 billion of positive gamma? It's almost impossible. So, we are finally entering into our bearish period here seasonally in the second half of February, where you begin to see market outflows after a strong month and a half, the biggest month and a half actually of the year, of inflows. And that will correspond with this OPEX, and it will correspond with the NVIDIA earnings. There is a possibility that you could get OPEX to hit, which rolls off a lot of that gamma, and then the NVIDIA report hits. But does this then mean that all of the market is now on NVIDIA? Meaning, like, if the NVIDIA report is great and we've got lower gamma, then everything can just rip right back up and continue? Or NVIDIA breaking down means that it happening post-OPEX means that everything can actually break down and move together? It's to be seen, but it seems like, and still a week away, the most important company in the universe, which is NVIDIA, is even more so the most important company in the universe, just because of the timing of this earnings report is very interesting, where it's actually going to happen right at a moment where you could get an unclenching of this insulated market right as NVIDIA hits. And it could lead to a bigger outsized move, and that bigger outsized move could happen in either direction. So we'll see how that plays out. As far as trading goes today, even though the market was extremely boring, it did seem like there were a handful of good trades under the surface that we were able to have. I know we called out this NVIDIA as a short off the second candle on the day today, so that one worked out pretty well. There was a whole bunch of good call outs at the open on the day today that worked out really well. Palantir just absolutely blowing my mind. I mentioned Palantir in the morning meeting today because we've been starting to see it trade differently than it had been trading. How Palantir traded like back in this move here when it was moving higher through the 50s, 60s, and 70s. How it even traded when it was moving higher more immediately after this earnings report would be that you would get the huge move that would come in the first 10 minutes of the day. And that was almost a signal to like, maybe you could put on like a cute extension short, but that was almost a signal to like not even attempt to short it all day and to actually ride it higher. Because the way that this thing had been trading would be you would get the wild move off the open that just seems like it's a crazy gamma squeeze from options call buying that's coming in where the stock goes, it gets super extended. Maybe you get a cute short in off that extension, but you get that first touch of the ADMA, and then that ADMA on the 5-minute just acts as like insane systematic buying that comes in on every touch that then just creates an uptrend that just goes throughout the day, and you end up with a massive up day in Palantir. Now the stock has started to change where I would say that this is the third time in 5 trading sessions where you get this opening move that looks like what we had seen in the past of that insane momentum actually coming in on the stock, but then it actually leading to full-on failure of that momentum. It happened back here on this day, on February 11th, where you had the big opening move. I remember creating this bull flag. I remember us actually calling out the short on the bull flag intraday because it wasn't trading right. Then it happened on Friday. On Friday, this thing absolutely ripped off the open through 120, and then on the second 5-minute bar of the day, it broke that low. So to me, just based on the way that this thing traded, I think I said it out loud on that point, I was like, wow, we finally might have a real top on Palantir if the momentum buying is coming in that's leading to a full-on failure, because we've never really seen that in the past. Yet then within 20 minutes, Palantir was testing 120 again, and it still closed really well. And then the exact same thing happened today. Huge momentum upside move. Look at the volume on this move too. Really big buying coming in, shooting star into a lot of extension into 125. It doesn't just pull back to the ADMA. And I said it on the first test here of this ADMA. I was like, all right, if Palantir is going to do its usual momentum playbook, you're going to get your touch of this ADMA, and then it's going to pivot right back up. It's going to make new highs, and it's going to continue higher all day. Nope. We got a full-out failure. It didn't just give a 15-minute correction. It broke the opening low. It even broke back below 120. So this thing now below 120, I thought looked like a phenomenal short, actually, because it's like, oh my gosh, you got the momentum upside move, full-on failure. Look at all the volume that came in. All those people are out of the money. We actually saw some bearish option flow coming in on the stock. It's getting below 120. You have this extension on the daily. I'm like, we get a close below 120. I got this upside tail in Palantir, and I'm probably seeing a move that even overshoots the ADMA on the downside, is what I was thinking. I was absolutely loving this thing on the short side below 120. And then, okay, fine. It extends down to 118.40 and bounces off that extension, retests 120, overshoots it a little bit, not the end of the world. Once this thing started getting above 120, 150 and was really starting to reclaim and hold that 120, it was like, holy cow, this is doing it again. Somewhat similar to the false breakout on Friday where it still managed to close near highs. I can't believe this thing is holding up as well as it is. Obviously, the market's being supportive. And then like everything else, this thing ripped into the close to close nearly on highs. And now instead of getting an upside shooting star on the daily chart on high volume failure momentum move that would signal, I would think, a pullback to at least 110, this thing pretty much closes on highs to let us know, hey, 135 is still in the cards. Just insane how you can't seem to break this stock for literally anything. I mean, when this thing was getting below 120, I would have bet a lot of money, and in fact did bet a lot of money, that there was no way that this thing was going to be able to get back to highs. It just looked like it finally was technically breaking on this upside move. And it's interesting because you were seeing HIMS pull back, which I called out as a potential short in the morning meeting, and you were seeing Hood, which got downgraded today and actually could have been a 1-2-3 play to the upside but broke down. get hit back down today. So some of these high flying stocks that you would think have been where the rotation has been going into and Mag 7 has been weak, actually did close a bit weak today. But I don't know. This thing just continues to be absolutely insane. So yeah, I mean, bottom line is the market continues to hold in like an absolute and utter champion. It's just been a really weird trading session to see Mag 7 as weak as it is and everything else as strong as it is. And we still managed to call out a few good trades on an intraday basis that I hope people were able to profit off of. But at the same time, until we get an unclenching of this gamma, it's very hard to be looking for big continuation moves at the index level. So that's all that I've got. I am happy to answer any questions that anybody has. Scrolling through the VTF, not really seeing anything. Over on the YouTube, what's your view on NVO based on the daily and monthly charts, longer term? As you probably know by now, I don't love trading these ADRs because they're so gappy. The daily chart looks terrible. It's a big bearish consolidation down here after giving a full look at this head and shoulders top. Look at that head and shoulders top. Measured move off of that would have been $30, so it would have brought you to 90. So now we've overshot that measured move of that head and shoulders top on that thing. Maybe this thing can base out at some point and break up. You have some support around 75, but I do not like the chart. That's the daily. I don't have a monthly on this screen. The weekly chart's making a bearish consolidation here, but again, that bearish consolidation is coming into support. You got really big support at $60 on the monthly if it ever were to get back down there. So yeah, I don't have a strong opinion on it, but I don't like it. Do you think we can look for a measured move in SPY in the Qs for a long play? In your opinion, is SPY better than the Qs? I mean, usually what we've seen is that the SPYs and Qs move together, but the Qs are just higher beta and give you a bigger move. So if you're looking for a big move on a breakout, I probably would prefer to be long the Qs and the SPYs. But I also don't want to chase price on $8 of extension in the Qs. So if you can get a good setup in the Qs, I like it. I do still think that there are some warning signals under the surface, though, that you have to be careful of that could lead to a failed breakout. So just know your levels if a failed breakout's actually coming in or not. But for the moment, you know, the market looks great. As far as a measured move goes, you could probably double the distance of this consolidation. So it's like 580 to, I'll call it 610. So it's $30. So you could get a move up to 640 in the SPYs on that continuation of that pattern. Qs, I don't know. The real low here was 500 up to like 535, 540. Depending on how you want to measure this, it could be anywhere from like a $20 to a $35 move on the break of the 530 level on the upside. I personally think, I read something recently that said that like 30 to 40% of breakouts are breakout failures to begin with. I actually think that this one is a higher probability of a breakout failure than usual. I'm just saying that as a probability. It's not a call. Insofar as a call on a move lower, I really need to see the failed breakout happen, which is why I wanted to see a potential close below this 610 so badly. But it, you know, last 10 minutes today were just crazy. For Apex Choice, since NVIDIA didn't drag, that was another good, I said the NVIDIA call already, just short of the second 5-minute bar that we had. Since NVIDIA didn't drag the market down when DeepSeek came out earlier this year, we probably shouldn't expect it will drag the market down even if earnings are not good. I don't necessarily agree with that statement because of the timing. And when you think about it, a lot of what's holding up the market right now is these AI-related QQQE names, as opposed to the Amazons of the world. So I actually think that I don't agree with you. I think that given the circumstance of this NVIDIA report, the timing after OPEX, and the fact of what's been holding this market up has been a lot of these AI-related names. That if NVIDIA doesn't perform and there's a negative read-through on AI, that you could see a down movement in the market just as correlations are increasing that can expand it. What I have learned from timing, and we spoke about this in an afternoon meeting last week, timing and positioning, sometimes it doesn't matter what the catalyst is. It matters the timing of the catalyst more than anything. I mean, what the catalyst is always matters, because there's degrees of extremes. If nuclear bombs started going off somewhere, it's not going to matter if the market has $11 billion of positive gamma, we're going to sell. But outside of that, some of the events that we saw that couldn't break the market, like DeepSeek, like the tariff stuff, have a higher potential to be able to break the market when the market structure becomes different, which I think it does starting later this week, early next week. From Robert, can you explain what kind of stocks you are looking for collecting that premium from options market, which you mentioned last week? I don't really remember what I mentioned last week. Maybe I was talking about how I occasionally sell puts. I mean, my approach is relatively simple. You definitely could do it smarter than I am, I'm sure. And I'm sure that there's ways where you could maximize reward better than I am on selling options. I think that Bill here on our team sometimes does a pretty good job on that based on the information he's looking at to expect things to come down and puts on some sort of straddle or spread or something. But I just turned to SoFi because even though I didn't do it today because I didn't like it because SoFi was elevated technically into today's trading session, I've been selling SoFi puts like just out of the money almost every week for months now, and it's just been enabling me to keep the premium. I'm interested in I think as a lot of people know if you've been following me for a long time or working with me for a long time, I was in SoFi long for a long time, and we finally got this base breakout. We finally got this break higher. I finally got to move to my target. Did really well with it. I've been interested in reinitiating my SoFi long if it were to get back below what was my target initially on the long, which I think was like $15 or something. So I've been pretty consistent in selling out of the money puts in SoFi, depending on where it's trading, anywhere from like $13 to $15. And the idea behind it is very simple. I want to kind of start a new NVIDIA long, a new SoFi long somewhere beneath $15 if it were to get back down there. It's trading above it. So what does that mean? Do I want to short it so that it gets back to my price? No, I don't. I'm bullish on SoFi. Do I want to chase $18 up here when it's really extended or when it's really trading above the price in which I want to start buying it? No, I don't. I want to be able to buy potential dips into the area where I want to be long the stock. So while it's trading above it, I just keep selling puts at those prices. If the stock were to come down and I were to get the stock assigned to me, I'm happy to have it at those prices. And if it doesn't, then I'm happy just to continue to collect the premium and be the beneficiary of the time decay every single week until it does. And when I do that, usually eventually I get the stock. I was doing that in Intel at a certain point. I was selling puts in Intel, and then it went down, and I got the stock and had a target of up to 25. So I got out of that at the end of last week on that move. SoFi just has been the same deal, except it never goes down, so it never gives me the actual stock. But every single week, I just, lock in a little bit of money from selling the options. So that's pretty much it. Or a lot of what I'll do sometimes, pretty simply, is instead of buying stock at a support level, if I really expect a support zone to hold, I just sell the puts at that price level, at that support level. And I can always liquidate those if I'm wrong for a loss, if it's going against me. But I've got both the fact that it's support and the fact that it's time on my side. So every day that goes by that stock where I sold puts at that support level doesn't break that support level, my position just goes more and more and more in the money in my favor. Hope that helps, Robert. From Joel, can you give your view on AVGO rel to mayor markets? I feel it's been lagging a bit compared to the strength we had on the bounce before the current range, but I'm unsure of my conclusion. I thought it may have tested gap down highs with mono, but the mono faded off. I don't fully understand everything you said in the question, but I can take a look at AVGO. I talked about it in the morning meeting today. AVGO, I felt, is a little bit more, it's like the Mag 8 stock, right? It's like the 8th one that they're trying to sneak in there. I felt that the technicals on this coming into today were a little bit more neutral than some of these other Mag 7 stocks that are more bearish, like Microsoft, Amazon, Google with their charting technicals. So I kind of just said in the morning meeting today, like, watch 237 on the upside, watch 228 on the downside. A break in either direction I think could give continuation. Above 237, this thing starts looking a lot better. Below 228, this thing starts looking a lot worse. And it was able to trade below 228 at a certain point today, but then kind of held in as the market did absolutely nothing for most of the rest of the day, and it's still in that range. But my thought process is more or less the same insofar as those zones on the upside and those zones on the downside, where the stock becomes more bullish and more bearish respectively. So that's what I would pay attention to, and I would say it's kind of neutral until then. From Robert, who do you think is the winner in the Intel TSM AVGO deal? I really don't know. We kind of talked about that a little bit in the morning meeting today when somebody asked me about trading TSM, and I actually said an extra reason to avoid it, beyond the fact that it's a sloppy daily chart and beyond the fact that it is ongoing, and beyond the fact that it's an ADR, is this ongoing news drama that seems to be impacting it. So I really don't know, and I don't think I have enough of a knowledge set on the semiconductor business to be able to have a strongly informed opinion on it. I've seen research reports come out that also kind of have told me conflicting information, where it seems like it could be bad for TSM, but maybe it's actually good for TSM because they can get more business done in America and they can continue to do their business. And I've seen with Intel, like, obviously this Intel's been ripping, that it should be good for Intel, but maybe it's actually bad for Intel because it's not actually going to happen in the way that the market's pricing in. I mean, I liked Intel to begin with. I just felt it was cheap here, and I liked the restructuring process it's going through. So I felt at a minimum, when I was going long in the stock, that I'd have some degree of a floor in it, and that if news could hit, that I could get a big move, and that's pretty much exactly what happened. But who do I think is going to be the winner in this drama between these stocks? I genuinely don't know. I don't have a strong opinion on it. It's outside my knowledge set. I do like Intel in the low 20s. I'm not chasing 28 after it just moved from 19 to 28 in 5 days. But if it gives me a big dip back below 25, I'll probably look to potentially get back involved in it. Back over to the VTF from Tate. With all the positive gamma and SPY QQQ basically unchanged, is this where we see the IWM rotation? Yeah, I mean, I'm actually surprised that the IWM isn't trading a little bit better, because usually what we see is when the RSP outperforms the SPY, when the QQQE outperforms the QQQ, the IWM outperforms both the SPYs and the Qs, which today it did. The IWM closed up more on a percentage basis than either the SPYs or the Qs, but overall this IWM hasn't really been able to go. So I would expect that, yes, you would see IWM rotation higher when we have Mag 7 weak, but the SPYs and Qs can't move. That's what I would expect, but it's not what we've seen. We just haven't actually seen that occur. I'm not 100% sure why, to be totally honest. I would almost expect with the QQQ versus QQQE dynamic that this IWM would be well above 230, and it's not. It's also just interesting to me, broadly speaking, that we're getting this rotation to these names that are more interest rate sensitive, right? When these interest rates, I know we got a little bit of a relief from kind of mid-January interest rate highs, but a lot of these companies, I remember looking at this data as a team like a year plus ago, when we were looking at the IWM and saying a lot of these more like mid-cap stocks have expiring debt at very low interest rates in 2025. So without any relief coming anytime soon, based on the Fed at least, maybe it comes from the federal government, on interest rates, it's an extra reason for me to be surprised that RSP could be outperforming SPY by so much. You would think what we've traditionally seen is that in higher interest rate environments, Apple acts best because Apple doesn't care what the interest rates are. They're going to be fine no matter what, and their debt is 40-year debt, some of it, and they've got this huge buyback. So usually when we see any sort of interest rate scare, which is every time we've seen an interest rate scare over the course of the last couple years, it was Mag 7 that held up the entire market and everything else was gross. Yet now we get this huge move lower in TLT today, move higher in rates, and RSP outperforms SPY, QQQE outperforms QQQ. It just doesn't seem sustainable. It doesn't seem sustainable that the most interest rate sensitive stocks could be the ones that lead the market higher, right as interest rates are going to continue to be high, and a lot of them are approaching like debt roll-off cliffs. I don't know. I this market's a struggle for me, honestly, right now. And I think Josh spoke about it a little bit when he came on the radio on Friday, that he was talking about how he's been struggling a little bit recently. I had a phenomenal January, phenomenal beginning start to the year. My February has not been good. And it's just been a frustrating market because, I don't know, I'm like a logic trader in a lot of ways. Like I follow technicals, but I need things to make logical sense. And when logic lines up for me is usually when I make the most amount of money also. Every like logical thought process, when I look at a lot of the data on how this market is trading right now, tells me we should be setting up to break down, but we won't break down, and the technicals are just breaking out. So that's kind of why I just keep trying to harp on the same things. Like, if you have a bearish thought process, okay, congratulations, the market's breaking out. And I'm saying that for myself as much as I'm saying it for everybody else. And the fact of the matter is, if the bearish thought process is going to be right, we'll see the failed breakout comes in, and then you can execute, as opposed to just trying to force the trade and just going through pain as the market's breaking higher. What happens if you're wrong? Which easily could be. Because the flip side of, to me, like everything pointing bearish right now, is that if things begin to improve in terms of my logical thought process, and we never got the breakdown, then this market goes to, when Cyril in the YouTube was asking me about the measured move to 640 or whatever in the SPYs, that's when you get the move to 640 in the SPYs, is when things actually begin to improve on everything that I think doesn't look good right now, and the market never broke down when things got bad. So, it's just a little bit of a strange market, I think, broadly speaking. I hope that helps with your question there, Tate. From Rex, on the NVIDIA short this morning, do you short it based on the 143 level? I thought that the real level in the stock was 142 was the gap fill. So 142 was the level I mentioned in the morning meeting. It overshot that in the first 5 minutes. That isn't to say that 142 level isn't going to hold on a momentum overshoot in the beginning of the day. It just means that I need to see failure, or I need to see a smaller time frame signal in order to be able to short it. So now I'm looking at NVIDIA being green also like every single day this month until today's trading session. And even today, I think it only closed flat. It's the first red candle that NVIDIA's had on its daily chart where it closed below where it opened in this entire month. So a lot of upside extension into a gap fill, and it's from big downside extension into big upside extension. So I'm not buying 142 even with the volume coming in. I want to look for a short. And then this thing got so extended by the time it got to highs That's why I was like, okay, you might be able to short it. I don't love doing this on the second 5-minute candle of the day. I prefer if it's like the third or the fourth. So I was a little bit nervous to make the call out, to be honest. But just all of the extension into the gap fill, I said, all right, here, this could be your small time frame signal to actually short the gap fill resistance. And it turned out to be correct. Let me read the rest of your question. With the first 5-minute candles volume, I thought that the 5-minute RDR could have easily shaken me out, so I didn't short it there. I was looking for 145-ish to short. Would you mind talking about it? Yeah, I mean, I think I already covered it, and especially I did have some degree of hesitancy for probably the same reason that you did. I didn't love that I was shorting the second bar of the day, or calling out a short for the second bar of the day on this Nvidia at that level. But I thought it was a good risk reward because even if it just pulled back to like this low of the 80 MA here at 950 and then made new highs, that's a good trade. You get a pullback to 141 and you shorted 143 and change for 45 cents or less worth of risk. That's a pretty good risk reward just for the initial trade, and then maybe it turns into something more. And if you get stopped out or shaken out, then it was still a good risk reward, and then you can just revisit the trade if it resets up for you properly. Appreciate the question, Rex. All right, I'm going to wrap it up there. Looks like we got through all the questions. Have a great night, everybody. Talk to you tomorrow.